प्रसाद आपका अभी नहीं है? हेलो, गिव मी 1 minute.
Hello, sir.
Yeah, hi, give me 1 minute.
Hi, good morning, sir.
Good morning.
Sorry for being late because I was not able to join it, right? And I joined it before 15 minutes, but it was still showing that waiting for the host to start the meeting.
Yeah, the link which was shared by Utkarsh was wrong.
Oh, I see. I'm really sorry, sir.
That is okay. That is not your fault.
Thank you.
That's okay. Yeah. Okay. Can you tell me about what are the major pillars of financial system?
There are 4 major pillars of financial system. That first is financial market, financial products, financial participants, and the financial regulations services.
Okay. And how many markets are there in financial market?
In the financial markets, there are 2 markets called as the capital market and the money market.
Okay. Okay. And capital market is further subdivided into how many markets?
The capital market.
One second. Dipti.
Yes, sir. Sorry, sir. So we need to just join at the time we have given, right, sir?
No. You don't have to join at the time given it. The person leaving the meeting will tell you.
Sorry, sir. I didn't understand. So can we join now or we have to join on the time?
Obviously you have to leave. Please.
Okay, sir.
Samir?
Yes, sir.
Why have you joined now?
Sorry.
Hello, sir.
1 second, wait.
Okay.
So you were telling there are two markets in financial markets.
Yes, sir. There are two markets in financial markets. There are two markets, that capital market and money market. And you asked me the question that capital market is categorized in two markets again.
Okay.
Then there are two markets in capital markets, like primary markets and secondary market.
Okay. And what is the use of both markets?
Primary markets, where the company can issue the securities to raise the capital, where the investor and issuer meet. And in secondary market, there is a place where companies can issue the securities, like, and lenders and borrowers meet in the secondary market.
Okay. Secondary market, lenders and borrower meet, or investor and investor meet?
In primary market, investor and borrower meet, lender and borrower meet, but in secondary market, investor and investor meet. I apologize for that.
Okay. And what do you understand by difference between order-driven market and code-driven market?
Order-driven market, it is a market mechanism. That order-driven market is a market mechanism where the securities are traded on exchange. The participants in the order-driven market are the investors, traders, etc. But in the order-driven market, it is the most transparent market, as the on-time order book is visible to the participants. But in the code-driven market, we can see it is not the transparent market, as the orders are done privately with the counterparties on OTC market. The code-driven market is traded on OTC market.
Okay. And in which market the liquidity is high?
In order-driven market, the liquidity is high. Yes.
Okay. And in which market order execution guarantee is high?
In code-driven market, the order execution guarantee is high. And as we can say, in order-driven market, the order execution guarantee is low.
Okay. Okay. And what do you understand by difference between direct finance and indirect finance?
Direct finance, indirect finance, there is no intermediary between the investor and borrower. The investment decisions are taken by the investor itself. The investor invests in the securities offered by the issuer. But if we see in the indirect finance, there is an intermediary, and the investor issues in the intermediary, and intermediary invests in the securities offered by the issuer. The investment decisions are taken by the intermediary in indirect finance. But in the direct finance, the investment decisions are taken by the investor itself.
Okay. How many different types of shares are there?
Different types of share means bonds, equities.
Shares. I'm asking you shares. Shares are not bonds.
Shares. There are two types of shares, that is ordinary shares and preferential shares.
Okay. What is the difference between ordinary shares and preferential shares?
Ordinary shares are the most common type of shares, and ordinary shares are the major part of the share capital. Ordinary shares have voting rights. Ordinary shares are traded on exchange, but the preference shares are the shares where the issuer gets. Preference shares are the share where an individual, an individual pays gets the premium and the dividend payment and and repayment at the time of liquidity. Preference shares have fixed maturity, preference shares have fixed dividend, and they do not carry the voting rights.
Okay. What is difference between, what do you mean by participating preference shares?
Participating preference shares, that these shares have a right to participate in the surplus profits given to the ordinary shares.
Okay. And what do you mean by cumulative preference shares?
Cumulative preference shares means that if the dividend is not paid in any year, then it gets accumulated and it is paid along with the maturity.
Okay. What do you understand by ADR?
ADR, American Depository Receipts. American Depository Receipts is a financial instrument issued by the Depository of America. ADR can be listed on American Stock Exchange. And ADR is of two types, that is sponsored ADR and unsponsored ADR.
Okay. What is the difference between both of them?
Sponsored ADR, in the sponsored ADR, if we say, then the issuer is willing to make available or issue the securities in American markets. But if we see in the unsponsored ADR, the unsponsored ADR are done without the information and knowledge of the participants. And in sponsored ADR, the issuer issues the bearance cost and it complies with the SEC, Security and Exchange Commission. But in the unsponsored ADR, it is done just behind the we can say on the demand and supply.
Okay. And what about levels?
Levels, there are three levels.
Do unsponsored ADRs have level?
No, they are not level.
Do GDRs have levels?
No, GDRs also do not have levels.
Okay. Then which product has levels?
The sponsored ADR has the levels. There are three levels. Level 1, the minimum compliance with SEC traded on OTC. It cannot be used to raise capital. Level 2, the moderate compliance with SEC traded on exchange. It cannot be used to raise capital. Level 3, full compliance with SEC. It is traded on exchange, but it can be used to raise capital.
Okay. What are the different types of money market products?
There are the different types of money market products. The first product is CDs, certificate of deposits. Second product is CPs, commercial papers. Third product is treasury bills, T-bills. Fourth is repurchase agreement, that is repos. And fifth is interbank lending, and it has the four subtypes, that overnight money, call money, notice money, and term money.
Okay. And how are commercial papers issued?
Commercial papers are issued through private placements, that is the issuers subscribe the CPs privately.
Okay. And how are treasury bills issued?
Treasury bills are issued through the auction process, which is called as Dutch auction.
Okay. What is the auction process?
Auction process is a process where there are the different kinds of competitors, that is competitive bidder and non-competitive bidder. The competitive bidder, they are expecting on T-bills, that is they go on bidding the price, and when upon the close of auction, the treasurers arranges all the bid prices in the ascending orders, lowest to highest, and start allocating to the lowest bidder first. In the second category that we see in the non-competitive bidder, the non-competitive bidder are allocated the T-bills just at the average rate taken out of the yield, and they are allocated the T-bills.
Okay, and what the rates are, which rate is allocated to non-competitive bidders?
The average rate taken out of the yield.
Okay. Okay. What is difference between call money and notice money?
There is a difference between call money and notice money. If we look at the call money, then we have to, if the money is borrowed, then we have to repay it when the lending bank calls for it. When it comes to the notice money, if the money is borrowed, then we have to repay it within a specific notice money, specific term, that is of this notice money is usually between 2 to 14 days.
Okay. Can you tell me different types of bonds?
There are different types of bond. If the issuer is government and the issuer is government based on issuer, there are the 4 types of bonds. If the issuer is government bond, quasi-government bond, agency bond, and supranational bond.
What do you mean by quasi-bonds?
Quasi-government bonds, the bonds issued by the government, but like organizations, but not the government. These government have the backing of government. These organizations have the backing of government.
Okay. What do you mean by accrued interest?
Accrued interest, just the bond price, the bond price is equal to clean price, and the clean price plus accrued interest is equal to dirty price.
Okay. What are the different methods of calculating interest? What are the different ways of calculating interest?
There are different ways of calculating interest. Like there is a term known as interest rate swap.
No. I'm asking you what are the different ways of calculating interest, accrued interest. If there is an accrued interest on the bond, what are the different ways through which you can calculate?
Accrued interest.
What are the different day count convention? No, what are the different day count convention?
There are 5 different day count convention. First is 30 divided by 360. It assumes that every month has 30 days and every year has 360 days. The second, when we come to the second point, that is 30 divided by 365. It assumes every month has 30 days and every year has 365 days. The third one, if we talk about, then it is actual divided by 360 days. It assumes the actual number of days in a month and every year has 360 days. When it comes to the fourth one, it actual divided by 365 days is equal to that it assumes that every month actual number of days in a month and every year has 365 days. When it comes to the fifth one and the last one, that actual divided by actual is equal to, it assumes the actual number of days in a month and divided by actual number of days in an year.
Okay. What do you mean by securitization?
Securitization is a process of converting illiquid assets into security. There is a term known as collateralized debt obligation. There are 3 terms of collateralized debt obligation. Collateralized.
Three types of
collateralized debt obligation. I would like to tell you the 3 types of collateralized debt obligation. That is, first is collateralized mortgage obligation. Second is collateralized loan obligation. And third one is collateralized bond obligation.
Okay. What is relationship between interest rate and yield?
The relationship between interest rate and yield is just opposite the way I tell you that when the interest rate goes up, then the yield goes up. When the interest rate goes down, then the yield goes down.
Okay. Now, what is the first you said it's opposite, but now you are saying it's direct.
It's a direct. I apologize for that. I heard the difference between interest rate and the bond price because these both aspects are opposite to each other. Like when the interest rate goes up, that time the bond price goes down. When the interest rate goes down, the bond price goes up.
What do you mean by NDF?
NDF, non-deliverable forwards. Non-deliverable forwards is a forward contract between two banks where a bank borrows a fund by giving financial security as collateral and repays money in the way of NDF, non-deliverable. Sorry, sir, I apologize for this. I was asking about repurchase agreement. I was telling you. This is the NDF, right? Non-deliverable forwards. Non-deliverable forwards is a contract on currency which cannot be freely exchanged between two domestic counterparties. The NDF settlement process is called fixing. The NDF settlements is done in cash. Is settled in cash. The NDA settlement process is called fixing. Like I said, in fixing, the non-deliverable currency goes flat. The profit and loss is calculated in deliverable currency. The non-deliverable forward goes flat means if we have to buy the $1,000, then we'll have to sell the 70,000 INR. Then we have to decide like what price goes. Like when we buy $1,000, like I said, we will.
So what
will
happen in fixing? What will happen in fixing?
In fixing, we fix the rates. Like if we have to buy the $1,000, then we just calculate that in deliverable currency. That if we have to calculate the $1, how many dollars for how many dollars we'll have to pay in domestic currency like INR.
No, that is the main contract. That is the main contract. You are buying dollars and you are paying INR. Suppose your main contract is buy dollars. What will happen in fixing? If your main contract is buy dollars, then what will happen in fixing?
In fixing, if we have to, could you please repeat the question, sir?
Your main contract was buy dollars, sell INR. What would be the contract in fixing? Which contract you will take in fixing? Actually, you are supposed to explain both of them together, but you just explained with one. But that is okay. Okay.
Yes, sir.
Anyways, it's okay. What do you understand by IRS, interest rate swaps?
Interest rate swaps, it is the two counterparties of transaction exchange the payments or cash flow on the basis of interest rates. And if we see the uses of interest rate swaps, then interest rate swaps became a tool, the essential tool for the risk managers, for the banks, for the investors, as well as for the treasurers, because the interest rate swaps have the more potential of uses, right? They can be used, they can be utilized. in different aspects.
What do you understand by credit default swap?
Credit default swap.
गोपाल कौन है ये? एक सेकेंड. गोपाल. Tell me, what do you mean by
credit default swap?
Yeah.
Credit default swap is in the fixed income securities, like it doesn't have its own value, and it derives its value from the fixed income securities, fixed income derivative. It was like credit default swap. It values from the fixed income security.
Credit default swap values from fixed income security.
No, the credit default swap with the fixed income derivatives.
No, what are you saying?
Credit
what do you understand by
swap.
equity swap?
Equity swap. Equity swap is a derivative which set the future cash flow and which are agreed to be exchanged between two counterparties on the decided fixed dates of future. Equity swaps can be used to substitute the direct transaction in stock.
No. Okay, you can go. You can message in the group for the next person to join. But my feedback is you should listen to the question correctly first and then answer, and work on FX and derivatives.
Yes, sir. I'll definitely study.
Okay, thank you.
Thank you, sir. It was a pleasure to speak with you.
Thank you.
Shall I leave, sir?
Yeah, a message in the group for the next person to join.
Yes, sir. I'll definitely. Thank you. Bye.
Hello. Hello.
Hello. Hello.
Samir.
Hi, sir.
Yeah, tell me. Yeah, you are audible.
Yes.
Yeah. Tell me, what are the major pillars of financial system?
Major pillars of financial systems are financial markets, financial participants, financial regulations, and financial products.
Okay. How many markets are there in financial markets?
There are specifically two markets. One is capital market and there is money market. There, long-term market is capital market, short-term market is money market. Capital market is derived into two parts, primary market and secondary market. Primary market is where company is willing to issue its shares in IPO or FPO. And in secondary market, the securities are traded, which are issued in IPO.
Okay.
In primary market, investors and issuers meet. In secondary market, investor meets.
Okay. Just give me 1 second.
Sure, sure.
Okay. So what are the different products?
Different products are derivatives, cash equities, fixed income, bonds, and equities, etc.
Okay. What do you mean by depositories?
Depositories are the financial institutions who holds the securities in electronic form.
What are custodians?
Custodians are those who holds who safeguards the assets of the custody, who safeguards the assets in custody of the dealer.
Of the dealer or of the client?
Of the client, sorry.
Okay. And what are repositories?
Repositories are the financial institutions who hold the data or information in electronic form.
Okay. Just एक second hold करना.
Yes.
यार ये मीटिंग शेड्यूल क्यों कर दिया है? हाँ ठीक है, continue. So tell me about what is difference between order-driven market and quote-driven market.
So order-driven market is a market where securities is traded on exchange. The order-driven market is most transparent market because order book is visible to all the participants. Order-driven market is based on certain rules and assumptions based on time, volume, and price. Quote-driven market is a market where securities are traded on OTC. In OTC, there are market makers. There are two prices: ask price and buy price. Buy price is buyers, and ask price is sellers. Quote-driven does not follow any rule book.
Okay, good. And what is the difference between direct financing and indirect financing?
Okay, so in direct finance, there is no intermediary available. Investor issues in securities issued by issuer. Investment decisions are taken by investors, and securities are in the custody of investors. Indirect finance is in indirect finance, intermediaries are present. Investor issues in intermediary, and then intermediary issues in issuers securities. Securities are in the custody of intermediary, and investment decisions are taken by intermediary.
Okay.
Yeah.
Okay. What do you understand by ADR?
ADR is an American depository receipt. Depository receipt is a receipt is an instrument issued by depository. American depository is a depository issued in American Stock Exchange by DTCC. There are two types of ADRs: sponsored ADR and unsponsored ADRs.
No, basically, what is ADR? If someone asks you what
American
is
depository receipt.
What full form है, please?
Okay. ADR is American Depository Receipt issued by DTCC.
Issued by Depository of America. Traded in American markets.
Traded in American market, yes.
Okay, now tell me, there are two types of
there are
ADR.
two types. Yes, there are two types of ADR: sponsored ADR and unsponsored ADR. In sponsored ADR, issuer is willing or make available its securities in American Stock Exchange. As the issuer is willing to issue its security in American Stock Exchange, issuance cost will be bear by issuer. Then just a minute, sir.
Recall, there are 4 points which make an sponsored ADR. Willingness to issue, then
willingness to issue. Then local depository will issue its securities in American depository.
Not issue. Issuer karta hai. Transfer.
Yeah, transfer its securities in American depository.
Okay, very good.
And local depository will have to comply with SEC.
Okay, very good. ये 3 हो गए.
Sorry, 3 levels.
ना, ये 3 हो गए ना.
Yes,
willingness to issue, transfer the shares, and comply with SEC.
Yes, and then issuance cost will be bear by issuer.
Okay, very good. Now there are 3 levels.
Yeah, there are 3 levels. Level 1, where there is minimum compliance. It is traded. It is done on OTC, and it is not help to raise capital. It cannot be used to help to raise capital. Then comes to level 2, moderate compliance. It is on exchange market, and it is also not used to raise the capital. Then level 3, full compliance. It is on exchange only. It can be helped to raise capital, and it has got voting rights.
Okay.
Coming on to unsponsored ADR. Unsponsored ADRs are issued by the unsponsored ADRs are issued by ADRs without giving information or knowing the issuer company. It is issued because of the market demand, and they are traded on OTC, and they don't have voting rights.
Okay.
Yeah.
What do you mean by participating preference shares?
Okay. Participating preference shares are preference shareholder gets have right to participate in excess surplus or profit of equity shareholders. For example, dividend preference shareholders getting dividend of ₹10 and equity shareholders getting ₹20. So the excess 10 rupees dividend that is paying to equity shareholder, participating shareholder, preference shareholders can get right or can option that or they can involve into that excess 10 rupees dividend.
Okay. And what do you mean by cumulative?
Okay. Cumulative preference shares are previous year preference dividend or shares which are not paid get accumulated and paid with current year's preference shares.
Okay. How are commercial papers issued?
Sorry?
How are commercial papers issued?
Okay. Commercial papers are issued through private placements.
Okay. And what is the issuance style of commercial papers? What is the issuance style? They are issued through private placement, and how are they issued?
They are issued by large corporates.
How? They are issued by large corporates. But what is their issuance style?
Okay, they are issued at discount. That is, they are issued at discount and redeemed at par. Yeah. And so the difference between issuance and redemption price is interest.
Interest. Yeah. And how are treasury bills issued?
Treasury bills issued through Dutch auction. There are two participants, competitive bidder and non-competitive bidder. Treasury bills are issued through Dutch auction. In Dutch auction, prices are allotted in ascending order, and to competitive bidder, the lowest price will be given first preference, and for non-competitive bidder, the average of competitive bidder will be allotted.
Okay.
Yeah.
What is difference between notice money and term money?
Okay. Notice money is borrowed and repaid in specific time, generally for 2 to 14 days. And term money is borrowed and repaid in more than 14 days. It is generally repaid after 14 days.
Okay.
Yeah.
What is the maximum life of a money market product?
1 year. It is a short-term market.
Okay. Can you tell me different types of bonds?
Okay. There are government bonds issued by government of a country. For example, municipal bonds, treasury bills, treasury bonds. There are quasi bonds. Quasi bonds are bonds which are issued by I'm not able to recall that word.
Quasi bonds are issued by organizations, those who have backup of government.
Yes. Quasi bonds are issued by corporates, but they are those who have backed by governments. Freddie, Fannie are some of the examples of quasi bonds.
Okay. We saw them in the example of agency bonds.
Yes, agency bonds. Agency bonds are those
quasi
bonds which are...
We did not saw them in quasi bonds.
Yes. Can I tell you about agency?
No. What do you understand by junk bonds?
Okay, junk bonds are those bonds issued by corporates who having low credit risk, low credit score. And as they are with high risk, the returns are high.
What are the different types of day count convention?
Okay, there are different types of day count convention. 30 by actual.
30 by actual? No.
Actual by actual. Then actual upon 360.
Actual upon 360. Okay.
Actual upon 365. Sorry, sir, I'm not able to recall all those, but yeah, I'm aware right now recalling these three.
30 by 360, 30 by 365, actual by 360,
yes,
actual by 365, actual by actual.
Yeah. Sorry, sir.
What is the relationship between interest rate and bond price?
Interest rate and bond price are inversely related. If interest rate goes up, bond price will go down, and vice versa. The reason is if interest rate goes, the bond price will go down, because if today one company is giving me interest at 10% and another company is willing to give me same at 12%. So the company who is giving at 10% will decide to reduce its price, or else the person will shift to new company for getting much more interest. So they are inversely related.
All right.
Yeah.
What do you mean by securitization?
Securitization is converting an illiquid asset into transferable security.
Okay. Okay. What do you mean by NDF?
Non-domestic currency.
NDF.
Non-domestic forward, sorry.
No.
Non-deliverable forward. Yeah.
So can you explain that contract?
Okay. NDF is a non-deliverable forward contract between two counterparties. It is done on OTC. Sir, I would like to give you example.
Okay.
I'm not able to recall the concept, but I would like to give you example. So
Okay.
if today I bought $100, I will pay for that $100 today's rate 70. But in future the dollar rate will go to 76. Then how much rupee I will have to pay for that equivalent dollar? That will be calculated by NDF.
No. You are saying for dollar how much for the for
For
dollar
those
for dollar
hundred
how
dollars, how much rupees I
but
will have to pay?
no, no. First of all, profit is not calculated in domestic currency. It is calculated in deliverable currency, which is dollar.
Yes, 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 right.
What do you mean by FX sell?
FX sell. FX sell. FX sell is a buying domestic currency and selling foreign currency.
What is indirect quote?
Indirect quote is getting domestic rate for equivalent foreign rate. For example, for 1 rupee, I will get $0.0033.
So what did you explain? What is indirect quote?
Getting domestic currency for equivalent foreign currency.
No. That
Like,
is how much quantity of foreign currency we will
yes,
get.
how much quantity of foreign currency we'll get for one domestic currency. For example, for 1 rupee, I will get $0.011. If the rate is $0.011 is for 1 rupee. So I will get that much quantity of dollar for rupee one.
No, you have to prepare FX well. What do you understand by interest rate swap?
Okay, interest rate swap. Interest rate swap is a swap between interest rate swap between two counterparties. The cash flow of two counterparties is swap, and the major example of this is fixed interest swap with floating interest.
No. What are you saying? Just give me an example of interest rate swap.
Okay, so there is HDFC Bank and SBI Bank. HDFC Bank is paying fixed rate to SBI Bank. In return, SBI is paying HDFC a floating rate.
Okay.
Yeah.
And how is this helping HDFC or SBI?
Okay, as the HDFC Bank is paying fixed rate, so if at all interest rate goes up in future, HDFC will get benefit. And if at all interest rate goes down, then SBI will get benefit from that
No.
floating.
Ratta mara aapne, ratta. This will happen only when the ideology of SBI is that interest rates will go down.
Yeah.
You did not explain that thing.
Okay.
What do you mean by credit default swap?
Okay, credit default swap. So can I give you example?
Yeah.
Okay, so there is bank 1 A and bank 2 B, and there is intermediary between them, that is C. So bank A is uh, bank A is taking funds from bank B, but sorry, bank A is taking funds from bank C, but bank B is
Funds.
Securities. सर वो ऐसा ही होता है ना कुछ तो कि मतलब बैंक वन बैंक इज
No.
giving acting like a insurer to one bank. So if any default happens, that bank will insure the another bank.
Mm-hmm.
So sorry, I will prepare FX and swap with.
Okay, you can go. Ask other person to join.
Okay, sir. Thank you.
You can drop.
Yes, sir.
Hello. Hello, Abhishek. You are on mute.
Am I audible, sir, right now?
Yeah. Give me 2 minutes, huh?
Okay. Am I visible too, right, sir?
Yes, yes, yes. Just give me 1 minute. मेरे को एक email को respond करना है. Huh. Okay, Abhishek. Tell me, what are the important pillars of financial system? Hello, can you hear me?
Sorry, sir, I cannot hear you clearly.
Yeah, I'm saying, can you tell me what are the important pillars of financial system?
Okay. Important pillars of financial system are financial market, financial participant, financial products, financial services, and financial regulations.
Financial services and financial regulation. Okay. Can you
Regulations.
explain what are financial markets? Hello.
Sorry.
Are you using earphones? I think.
Sir, your audio is not proper. Yes, sir. I'm using earphones right now.
But I don't see any problem in my connection.
Okay. Can I reset my mobile because I'm using hotspot right now?
Can you hear me now?
Yes, sir.
Clear? Is it clear?
Not that, but I can understand what you're saying.
Okay. I was saying, can you tell me about financial markets?
Okay. Financial market is a market in which financial products are traded between lender and borrower. Financial markets are of two types: capital market and money market. Capital on the basis of term, there are two types: capital market and money market. Capital market is the market where long-term securities more than securities having more than 1 year maturity are traded, and the money market is the market where securities having maturity equal to or lower than 1 year are traded. So in capital market further divided into two types: primary market and secondary market. Primary market is also known as initial public offering market. In primary market, investor and investor meet for the first time, and in secondary market, in secondary market, in primary market, investor and issuer meets for the first time, and in secondary market, investor and investor meets. Yeah.
Okay.
I got a little bit confused in between them.
Okay. Oh, can you tell me about financial participants?
Okay. There are several financial participants, including retail investors, HNIs, that is high net worth individuals, corporates, repository custodian, then trusts, government, mutual funds, hedge funds, regulatories.
Okay.
Then educational institutes, religious places. They also can invest in financial market.
Okay. What do you mean by depositories?
Depository is a financial institute or firm which holds security of the client in electronic form.
Okay. And what do you mean by custodian?
Custodian is a financial institution or firm, or it can be individual who holds
custodian.
assets.
No, custodian cannot be an individual. And custodian cannot be an individual.
Okay. Custodian is financial institute or firm which holds the financial assets of the client.
Holds or they safeguard?
Safeguard, sorry.
पढ़ाई में गड़बड़ लग रही है मेरे को. ठीक है. What do you mean by repositories?
Repository are financial institutions who holds information or data in electronic form.
Okay.
Of the client. Yeah.
What do you understand by order-driven market and code-driven market?
Okay, these are the market mechanism. Order-driven market is nothing but the market which is traded on exchange. Order-driven market is not negotiable. It is standardized.
Not negotiable means? Okay.
It is standardized.
Okay.
Yeah. It is standardized. It is regulated. The market is regulated. And it is it is transparent type of market because the whole order book is visible to all participants. Yeah. And the order-driven market is based on several rules in rule book, which includes rules on the basis of rate, on the basis of value, and on the basis of time. Yeah. And then there is a code-driven market, which is the code-driven market is we can say that it is OTC traded market or over-the-counter traded market because the market makers and investors meet here actually. The participants are known to each other, and the market makers are those entities which simultaneously quotes bid and ask price at the same time. this is not that much transparent market as compared to order driven market, because the order book is not visible to all its participants. Yeah. Order driven market, I want to add more points. Order driven market is in order driven market, order execution speed is high, but order execution guarantee is low and liquidity is high. Whereas in code driven market, order execution speed is low because the counterparties had to meet each other, and the order execution guarantee is highest.
Okay. Okay, fine. What do you understand by ADR?
ADR is nothing but the type of deposit receipt. But the depository receipt, which is issued by American depository, that is DTCC. DTCC is I cannot remember. I cannot remember actually its full form. It is issued by DTCC. America. If a company in India, suppose if a company in India wants to expand his market base in foreign country like in America, or wants to raise capital in USD, so it will approach the local depository of the American bank, and then this local depository transfer the shares of the shares of this company to the depository in America, and this that depository will list the deposit receipt on the American Stock Exchange. That can be NYSE or Nasdaq.
Okay.
There are several types of American deposit, American deposit receipt, basis on willingness of the company. So if the company is willing to issue deposit receipt in the American market, so it can be called as a sponsored ADR. In sponsored ADR, the company is willing to issue deposit receipt in American market. Sponsored, there are several levels for compliance in sponsored ADR. Level 1, which is minimum compliance. In level 1, the deposit receipt are traded on OTC, cannot raise capital. Level 2, which is moderate compliance. In level 2, deposit receipt are traded on exchange but cannot raise capital. Level 3, which is full compliance. In level 3, the deposit receipt can be traded on exchange, can raise capital, and yes, level 3 deposit receipt holders have voting rights also. Then unsponsored, yeah. Then unsponsored ADR. Unsponsored ADR simply the opposite of sponsored ADR, because the company unknowingly the company, the American depository issues the deposit receipt in American market.
No, it's not. It's not unknowingly. It's not unknowingly. They issue because to cater the market demand.
Yes, that what I'm gonna say, on the market demand. Yeah. And the American unsponsored ADR have no voting rights, and they are traded on OTC.
Okay. What do you mean by participating preference shares? Can you give an example?
Yeah, so participating preference shares. Participating preference shares are those type of preference shares which participate in the surplus profit of the ordinary share. For example, if a company is giving, if a share price of a company is 100 rupees and it is giving a 15 rupees profit, 15 rupees dividend to an ordinary share, and fixed dividend for the preference share is 10 rupees. So the 5 rupees will be given additionally to the participating preference shares.
Okay. Okay. Can you tell me about money market products?
Okay. There are 5 money market products. First, certificate of deposit. second, commercial paper, third, T-bills, fourth, repurchase agreement, and fifth, interbank lending. Yeah. Do I need to elaborate that also?
Yeah. Can you tell me what is the difference between notice money and term money?
Okay. Notice money and term money are nothing but the types of interbank lending. In notice money, the money is borrowed for
in notice money.
In notice money, money is borrowed for a specific time of period for 2 to 14 days, and in term money, it is borrowed for more than 14 days.
Okay. All right. How are commercial papers issued?
They are issued in private placement method. The issuer and borrower meet privately with each other.
Okay.
Yes.
And how are treasury bills issued?
Treasury bills are issued via auction method. Mainly, it is known as Dutch auction method, in which there are two types. There are two types of bidders: competitive bidders and non-competitive bidders. The bid price, which is the price which is bid by competitive bidders, is calculated in ascending order. That is from lowermost to highermost on the basis of their interest, their receiving interest, and the average of this bid price will be given to the non-competitive bidders. That non-competitive bidders are always open to buy T-bills. Yeah.
Okay. What is the relationship between interest rate and yield?
Okay. As they are both, what I can say, as interest rate increases, the yield also increases. For example, as interest increases, yield also increases. For example, we can say that a bond having face value of 1,000 rupees and coupon rate is 10%. That means it is giving 100 rupees coupon. So if the bond price, due to some market circumstances, if the bond price decreases in the market, say it is decreases to 800 rupees. So the coupon will be as it is, and that is 100 rupees. So rate of interest on the rate of interest that is given will be 12.5%, and also yield will be increased according to that.
No. एकदम गलत example दिया.
Okay.
See, if your bond is giving 10% and the bond in market is giving 12%, means the value of your bond will decrease. If interest rates in the market go up, bond price will go down, right?
Yeah, and yield increases.
And yield increases. If your bond price is less, your yield is high.
They are inversely proportional to each other. Three of them.
What are inversely proportional to each other?
The bond price and interest rate are inversely proportional to each other, and bond price and
this is how we have to
is inversely proportional.
मुझे नहीं समझा आपने क्या example दिया. I think even you didn't understood what you were saying.
Yeah, I will work on that.
What are different methods of calculating accrued interest?
Accrued interest is the interest. Okay. Yes.
What are different day count conventions?
Okay, day count convention. There are 5 types of DCs, that is day count convention: 30 by 60, in which days of the month are assumed as 30 days, and days of the year are assumed as 360 days. Then it is 30 by 365, in which days of the month are assumed as 30 days and days of the year are assumed as 365 days. According to that, there is actual by 360, then actual by 365, and actual by actual also.
Okay. What do you mean by dirty price?
Dirty price is nothing but the accrued interest plus clean price. Means if accrued.
What do you mean by securitization? No.
Okay. Securitization is the process in which illiquid assets are get converted into securities. Yeah.
Okay. What do you understand by NDF?
Also.
What do you understand by NDF?
NDF are non-deliverable forwards in which the currency which is non-deliverable always go flat, and the currency which is deliverable is only that used to calculate profit or losses. And it can say that non-deliverable forwards are also known as cash settlement forward, right?
No, I didn't understand.
Okay, I can repeat that. Non-deliverable forwards are nothing but the currencies which are non-deliverable, which means that their value is fixed or tied with something, and yeah, and it will be flat as it is, and in the exchange of deliverable currency, the deliverable currency is the only thing in which profit and loss will get calculated. Yeah, and that's what. And NDF is also known as cash settlement forward.
Okay. What do you mean by FX sell?
FX sell means selling a foreign currency and exchange of which buying a domestic currency.
Okay. What do you mean by indirect quote?
Indirect quote is one of the type of quotation in forex. That is in indirect quote. It is the method of quoting one domestic currency against unit of foreign currency.
Indirect quote, no. Indirect quote gives us quantity of foreign currency against one domestic currency.
No, sir. Quantity of foreign currency against domestic currency, it is direct quote.
No. मैंने सीखा है, मेरे को मालूम है ना. Direct quote is price of foreign currency. Direct quote is price of foreign currency. $1 is equal to 76.
Right. Price of
quoting for price of one foreign currency.
Price of one foreign currency against domestic currency, it is direct quote. And
direct quote. And indirect quote is quantity of foreign currency in one domestic currency. 1 rupees में कितना dollar आएगा?
Yeah, that's what I said. That sir. At quoting
you said
one domestic
price.
Currency.
When I asked you about indirect quote, you said indirect quote is price of foreign currency against one domestic currency.
Okay. Yeah. I said in past English. Sorry, sir.
Achha. So can you explain what is CDS?
CDS is credit default swap.
Okay.
In CDS, CDS can say that it is a that what I understand, that it is a nothing but the insurance which is paid by the bank to the bondholder.
Okay. Can you explain the entire arrangement of a CDS contract?
Okay. If a bondholder, that in our case we can assume that Reliance, if a Reliance is holding a bond, of rupee having coupon rate suppose 10%, and Reliance is assuming that the rate of interest in the market will get decreased. So it will approach a bank, for which he will say to bank that
Reliance
I'll
is
pay
thinking
you.
that Reliance is thinking interest rate will decrease, and that is why they will take CDS. That is what you're trying to say, right?
Sorry.
Reliance will approach an investment bank when Reliance is thinking that interest rates will go down.
No, sir, I correct that. Interest rate will go up because it has to pay
चलो ठीक है,
interest
interest rate. CDS is not taken on interest rate. और बोलो, interest rate ऊपर जाए नीचे जाए. Reliance will not approach an investment bank for a CDS when he is worried about interest rates.
Okay.
Reliance,
he'll think that market price will.
It is not dependent on
down.
market price. CDS is taken when Reliance think that the security will default.
Okay.
Security will not pay coupon.
Sorry, sir. Yes, sir.
क्या preparation किया तुमने फिर? Tell me, what do you mean by equity swap? What is equity swap?
No, sir, I have read it, but I cannot remember right now.
Okay. Can you give me an example of interest rate swap?
Interest rate swap is nothing but the exchange of fixed interest to the floating interest in two counterparties.
Can you give me an example?
Okay. Suppose there are two banks. One is DB. One is Deutsche Bank, and second is suppose Bank of America. So the Deutsche Bank is sorry, sir.
Okay, you can go.
Thank you.
Ask other person to join. You have to work on NDF. You will have to work on derivatives a lot.
Yes, sir.
Hello.
Yeah. Hi.
Yes.
Tell me, what are the major pillars of financial system?
Major pillars of financial system are you meant to say this capital market, money market?
Pillars. I believe you have studied everything.
Yes.
What are the pillars of financial system?
Okay. Pillars of financial system are just a minute.
अब कहाँ देख रहे हो राइट में?
नहीं सर. Actually, sir, nervousness में थोड़ा. Just can you give me 2 minutes? I'll just...
10 minutes?
No, 2 minutes.
Okay. चलो मैं बताता हूँ आपको. मुझे पता है वहाँ पे बुक पड़ा है. अगर मैं देखूंगा तो बुक ही मिलेगा मुझे वहां पे. आई एम गिविंग यू दिस लास्ट चांस.
Yes.
ठीक है. तो financial 4 pillars are financial markets, financial products, financial participants, and financial services and regulations. Are you able to recall?
Yes, sir. Yes.
नहीं तो मैं आपको सजेस्ट करूंगा कि आप थोड़ी देर के बाद दो, एक बार पढ़ के शांत होके पानी वानी पी के.
नहीं सर, अभी दे सकते हैं.
ठीक है. So tell me, what are the 4 pillars? What are the major pillars of financial system?
Major pillars of financial system are financial products, in which we have capital markets and money markets.
Financial products में we have capital market and money market.
No, equities, derivatives, bonds, debentures. Those
Okay.
are
These are what?
financial...
These are what? Financial products.
Products, yes.
Okay. So financial product is what? A pillar of financial system, right?
Yes.
Okay. What are the other pillars?
Other pillars are rules and regulations, regulatories, which
Okay.
are depository.
What is another pillar? What is other pillar? These are 2 pillars. What are other 2 pillars?
Yes. Other 2 pillars are
The 2 pillars are financial participants.
Participants, yes.
Okay. Can you name some participants?
Yeah. In which high net worth investors, brokers, dealers.
Okay. What do you mean by brokers and dealers?
Brokers are those individuals or firms which deals on behalf of others, means investors, and dealers are those individuals or firms who deals on behalf of themselves.
Okay, very good. And what do you mean by depositories?
Depositories are the firms or institutions who holds the investment in electronic form.
Okay, who holds securities, not investments.
Security, yeah, securities.
Okay, what do you mean by repositories?
Repositories are the institutions who holds data in electronic form.
Very good. And who are custodians?
Custodians are those who act as a mediator for the investor and the institution. Or
No. Custodian, custody.
Yeah, custodian has who acts
Custodians
as
are who safeguards.
Safeguards the securities.
Safeguard the assets.
Assets.
Okay. How many markets are there in financial markets?
There are capital market and money market, derivatives market.
Sorry, I'm not able to see you.
Just a minute. Can you see me? Capital markets and money markets.
Capital markets and
money market.
What do you mean by capital market?
Capital market is a long-term market which in which investor invest for a long period of time, which consists of primary market and secondary market. Can I explain again?
No. Just a second. Yeah, what do you mean by primary market and secondary market?
Primary market is a market in which issuer issues its securities for the first time for the trading, and in secondary market there are already some securities which are traded by the investors.
Okay. What do you understand by order-driven market?
Order-driven market is a market where the securities are exchanged on stock exchanges, and order-driven market is a market in which equities, shares, debentures, those securities are exchanged over the stock exchanges. They are the safest, which they are regulated by the
What are the characteristics of order-driven market? Is liquidity in order-driven market high or low?
High. Liquidity is high.
Okay. Transparency is the high or low?
Transparency is also high.
And order execution speed or order execution guarantee?
Order execution is really quick, and order execution guarantee is also there because they are very transparent.
No.
And
order execution guarantee is high in order-driven market?
Yes.
So if I want to buy MRF at 50,000, you are saying it would be guaranteed. The transaction would guarantee. MRF is currently trading at 76,000. I want to buy at 50,000. Will somebody sell me in order-driven market?
No, at 50,000.
So आपने तो guarantee बोला ना? You said transactions are guaranteed. Okay. Order-driven market is used for which securities?
Shares, equities.
Okay. Okay. And code-driven market is used for which securities?
It is for bonds. It is a over-the-counter market, so it is used for bonds and derivatives.
Liquidity is high or low? Liquidity is high or low?
Liquidity is low in code-driven market.
And transparency?
Transparency is also low.
Okay. What do you understand by ADR?
ADR is an American Depository Receipt, which is issued by the American Depository. If any company wants to market its shares in in USD, I mean in American market stock exchange, so they can issue their shares through American Depository Receipt. And
how many types of ADR are there?
There are sponsored and unsponsored ADR.
What do you mean by sponsored ADR?
Sponsored ADR are those which are known to the customers, investors, and sponsored ADRs are issued by and the issuing company
what are you saying?
Sponsored ADRs are ADRs which are known to the investors and
known to the investors मतलब
पता होता है इन्वेस्ट
नहीं. There are 4 points which define a sponsored ADR. If you don't know, we can move ahead. Don't waste the time.
Yes.
What do you mean by cumulative preference shares?
Cumulative preference share is a preference share in which if the interest of 1 year.
Interest? Do shares get interest?
Dividend of some year is pending, and it will be get cumulated and will receive the preference shareholder in the next year.
Okay. What are the fundamental rights of an ordinary shareholder?
Ordinary shareholder has a right to vote Ordinary shareholders
Fundamental right,
share,
right to vote,
yes.
correct. Fundamental right to vote, correct. Okay.
Ordinary shareholders are the last one to get the dividend, and ordinary shares get the right in profit. In the surplus gain, they get the right.
Okay, one more right.
Ordinary shareholders are the part owners of the company, as they hold the shares.
Okay. What are the different money market products you know?
Money market products.
Just 1 second. What are the different money market products?
Yes, money market products are commercial bills,
commercial bills.
Commercial bills, treasury, commercial papers, treasury bills, certificate of deposit, and repurchase.
And interbank lending.
Yes, interbank lending.
Okay. And how are commercial papers issued?
Commercial papers are issued privately. To the commercial paper are issued by a corporate in private manner.
What is the issuance style? In what way they are issued?
So they are issued at discount and redeemed at par.
Okay. How are treasury bills issued?
Treasury bills are issued. They are also issued at discount and redeemed at par.
How are they issued? That is the issuance style. But yes. How are treasury bills issued?
They are issued by the government. The treasury bills are.
I am saying how. You are telling me who issues. How are treasury bills issued?
Commercial paper. Treasury bills are issued publicly. On the.
They are auctioned.
Yeah, auctioned.
What is relationship between interest rate and yield?
Interest rate and yield are directly proportional to each other.
Okay. And what happens to bond price when interest rates go up?
When interest rate go up, bond price will go down.
Okay. What are the different day count conventions?
Day count conventions are 30 by 360, 30 by 365, actual by 360, actual by 365, and actual by actual.
What is dirty price?
Dirty price is a price which includes accrued interest and price of.
What do you mean by junk bond?
Junk bonds are those bonds whose risk is very high. They are the bonds issued by the BB.
What do you mean by securitization?
Securitization is a process in which a company, the illiquid assets are converted into the securities and issued to the customer.
Okay. Which securities are made out of securitization?
Mutual funds.
Which securities are formed out of securitization? MBS, ABS.
House, mortgage-backed securities, asset-backed securities.
What do you mean by NDF?
NDF is a non-deliverable forwards, which are those just a second. The currencies which are which cannot be exchanged by the non-domestic countries.
Non-domestic countries.
Non-domestic currencies.
What do you mean by non-deliverable forward? Explain me the contract.
Contract.
Yeah. What do you mean by non-deliverable forward contract?
Non-deliverable forward contract are those in which
What do you mean by indirect quote?
Indirect quote. Indirect quote is
What do you mean by interest rate swap?
Interest rate swap is a swap in which one counterparty exchange its interest rate
What is interest rate swap?
interest rates are swap in.
Can you give an example?
Yeah, okay. If a company is issuing issuing bonds and then
What do you mean by CDS?
CDS is a credit default swap in which if a bank is issuing if a bank has taken some loan from a X company, then if he thinks that the
What
it will
are you explaining? Credit default swap.
Yes.
Bank has taken a loan.
Bank has given a loan to someone, to suppose X entity, then he thinks that it will default the loan, then
Okay.
he takes the he swaps it with
आ रहा है कि नहीं आ रहा है, क्या करें आप बताओ, जल्दी बताओ, टाइम वेस्ट हो रहा है।
nice.
ठीक है, मैंने जबरदस्ती मार्क्स दिया है आपको एफएक्स और डेरिवेटिव्स में, ताकि आपका लेवल खराब नहीं होए। ठीक है, 50% मार्क्स मिला है आपको टोटल मिला के। तो नाउ यू सी व्हाट इज टू बी डन। मैं तो ज्यादा कुछ बोल नहीं सकता हूँ, ऊपर से आप ठहरे लड़की, तो बोलना भी गलत बनेगा। ठीक है, आई लीव दैट अप टू योर फाइन सेंस ऑफ जजमेंट एंड नॉलेज, how you want to approach your studies and how serious you are about this course, or how serious you are about your career in investment bank. ठीक है, you can go. I already messaged in the group. I will resume later. You can go.
Okay.
Thank you.
Thank you.